Well, hi, and welcome to Market Week in Review for the week ending August 14th, 2026. I'm Paul Eitelman from Investment Strategy here at Russell Investments. And yeah, we're in the dog days of summer right now, but two developments stand out in financial markets this week. First, we've had a continuation of the strong global equity market rally. And second, some pretty favorable U.S. inflation data that has helped to support stronger performance out of U.S. fixed income markets on the week. Starting with the strong equity market rally, sitting here on Thursday after the markets closed in Seattle, we're tracking another weekly gain in U.S. and global equity markets. The S&P 500 index is up around 0.6% on the week, but even better performance month to date here in August. We're tracking a rally of around 4%. So really strong returns here in the summer period. And a lot of that's really coming through from corporate earnings. The second quarter reporting season is one of the best I've seen in my 20-year career. We're tracking really strong absolute earnings growth, strong guidance from management teams looking out into the third quarter. And encouragingly, it's very broad-based in terms of the fundamental strength we're seeing across the equity market right now. AI names are delivering strong earnings growth. Non-AI names, large cap, small cap, we're seeing a lot of positive fundamentals here in breadth of that across the equity market. The second notable development this week is around fixed income markets. So we had two important macro releases on the inflation side, consumer and producer price inflation for the U.S. economy. Both of those undershot the consensus expectations of economists. And on the back of that softer inflation data, the market has started to price down the likelihood of the Federal Reserve needing to raise rates at their next meeting in September. At the beginning of the week, the market viewed that outcome as being close to a coin toss in terms of a hold versus a hike. Sitting here on Thursday in Seattle, the odds of a hike have dropped to about 1 in 3. And on the back of that, we've seen Treasury yields decline and a bull steepening of the Treasury curve. So bigger declines at the front end of the curve that are more sensitive to Federal Reserve policy. So those were the two drivers for this week, both of them being positive, healthy earnings supporting the equity market, softer inflation supporting the bond market. So it's been a good time to be invested here in the Northern Hemisphere summer. So those are our key takeaways for this week. Thanks for tuning in to Market Week in Review, and we hope to see you again next time. Thanks a lot.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.